Good afternoon. I'm Dave Weisberger, the CEO of CoinRoutes, and it's time for This Week in Crypto. It's Friday, October 7th, and I wish I could say that something major had happened in the markets, but the reality is we are still in a trading range. In fact, correlations may be higher than ever. Over the last week, if you look at, and we'll talk about some of the details in a second, but if you look over the last week, the NASDAQ and Bitcoin are both down around 1% or so. Yes, there's been fireworks. Today, for example, after the good jobs report, but so good that it was considered bad, the NASDAQ is down over 3.5%, Bitcoin is down over 3%, and more or less treading water for the past week, as we've said. And as we talk about ranges, Bitcoin is still at 19 and change, is still in the middle of the 18 to 22 range, towards the downside, but nothing significant. And, Ether's correlation to Bitcoin and the rest of crypto has been higher than usual this week as well, with Ether more or less mirroring Bitcoin's move. Seemingly, the post-merge mining sell-off is now over, and so we'll see when fundamentals start to matter in this market. It is worth having a quick conversation, though, about the so good it's bad scenario, because we've seen this before. The fact of the matter is, people in the market today see a jobs report with unemployment at 3.5% and slightly more new jobs added as such good news that the Fed will say, okay, great, we can raise 75 basis points in the next meeting, when others were thinking that it would be only 50 basis points. The reality in my mind is it's a bunch of crap. The fact is the Fed, from a U.S. domestic point of view, is going to keep raising until they see low inflation prints. That's been their history. They've never been particularly good about timing the market. I don't expect this to be any other difference. That said, the Fed is still trapped. Keep in mind, both the long end of the curve in the U.S. matters an enormous amount because the government needs to finance ever-increasing deficits. And the other factor that we've talked about before is overseas. The fact that the pound has recovered from its potential cataclysm the other day with significant volatility about a week and a half ago is a bigger reason why the Fed can stay the course so that they're continuing than anything else. The fact of the matter is the strains that the Fed is putting to other countries is a bigger deal. It shouldn't be surprising to people, but it looked kind of weird that the UN actually called on the Fed and other central banks to stop hiking rates so aggressively because of the likely scenario that will engender. And we know that the world is facing food shortages this winter. We know that Germany and a lot of Europe are facing gas shortages and heating shortages and electricity costs that are skyrocketing. The fact of the matter is the world outside of the U.S. is a far bigger reason that the Fed may be forced to pause than what's happening in the U.S. Now, Arthur Hayes has been talking about this for 6 months, so I'm hardly taking credit for it, but it is worth keeping your eye on. Any more currency issues outside the United States could end up having a change in policy. And that's something to look, particularly October has traditionally been a month for these things to happen when they do. I don't put much faith in it. I still think the big impact on our markets is the likely election, and we're now 4 weeks out or 4 weeks and a couple days out from the midterm elections, which will be a big deal in terms of both regulatory policy in the United States as well as in future direction. A return to some form of bipartisanship, aka gridlock, might spell good news for the U.S.'s ability to at least stop escalating its budget deficits. But we'll see. In any case, the markets are doing what the markets are doing, more or less flatlining since, over the last few hours and more or less flat over the last week. In news for crypto, there have been a couple of things that are worth talking about. Probably the big one, I'll mention the big one is the Binance coin hack, which I don't have all the details on and I don't want to regurgitate all of it, but more or less there was an exploit in the cross-chain from the BSC token hub, which allowed hackers to attempt to steal $530 million of BNB, of which 430 is still on a BNB chain address. So it's really a $100 million exploit, and in fact, a lot of that are in known addresses or addresses that people can actually watch. So it'll be interesting to see how much ultimately ends up getting stolen. But it does point out the potential vulnerability of cross-chain solutions, and people are leery of those. It doesn't really have a whole lot of impact on, and it's had no impact on the market prices we've described on Bitcoin, Ethereum, or other layer ones, but it does speak to interoperability concerns, and these sorts of things will continue to happen, and the markets and the chains themselves will continue to get strengthened. but we shall see. What does matter here is that 69% of all the hacks that we've been seeing have been in these cross-chain bridges, which represents a small fraction of overall assets. So it is important to understand that it's not the big deal that some of the mainstream media might make in terms of, oh no, crypto is not safe. Yes, things happen. Yes, it's a new technology. And yes, you need to be careful. But cyber theft on a global scale is in the billions upon billions of dollars every year. I don't have the exact data, but it's kind of ridiculous to just say that crypto is the only thing that is vulnerable to that. The other interesting news this week is that the Bitcoin hash rate hit an all-time high. Now, had I said that back when it was trading at 60,000 plus earlier this year, people wouldn't have been that surprised. But the fact is the hash rate is now higher than it was back then, and actually dramatically higher than it was in July after the sell-off. This indicates significant investment in the network, making the network much stronger, and generally when we see this, it's correlated to subsequent price rallies. The fact is, I will always say, is Bitcoin trades like an option on its own adoption. And the fact is that many people are starting to realize, with over 30% of the world trading or being supported by currencies that are particularly unreliable, Bitcoin as a global store of value has a very significant use case. It looks like miners agree, and it looks like the network is continuing to grow and strengthen. This, to me, is very good on the long-term side, but I think short-term actions, we are still correlated to risk assets and still dealing with the hangover of investors being untrusting of the crypto system in general after the issues that happened with Celsius and Voyager and Three Arrows, etc. The one closing thought that I will leave you with this week is I keep having every single day reminders that what we are going through today is not remotely like what we went through in 2018. Now, at CoinRoutes, we started in 2017. We were just coming up to speed with our MVP in the beginning of 18 and actually tried to build the product with working with clients during crypto winter. At that time, almost everyone I knew from the traditional finance world thought I was crazy to go into crypto, and in particular in 2018 kept wondering when I'm going to leave and go join some other firms. I was given multiple opportunities to interview at other firms and get out of it, and that is a very interesting thing because most of those people believed the market was just going to fade to nothingness, that it was the tulip bubble after tulip, and basically was just going to return to being the province of florists. Well, the reality is that is not what's going on now. What's going on now is we have friends of mine in senior positions, such as Tal Cohen at NASDAQ, publicly talking about how NASDAQ is moving into crypto custody. We have another friend of mine, Jamil Nazarelli, leaving head of his Citadel Securities perch to run a new crypto exchange. We have a lot of these things happening. More investments coming in from multiple sources, it would take me too long to list them all, into the infrastructure. The fact is this too shall pass when it comes to market dynamics. And while it could take a long time for markets to work through issues, the future for crypto is bright. And I just want to remind that of people as we go through these dog days of October. Dog days of August from a weather point of view, but in market terms, October tends to be an unkind month at times. We shall see. In any case, stay safe out there, and we'll talk again next week.